Well, good morning, everyone. And if you've just joined us, we'll be starting in about 30 seconds with the first panel presentation here. Very excited to start off the IoT PropTech Summit with the first panel, the changing insurance landscape, the reduction of risk through IoT. All right, well, welcome everybody, and I'm very pleased to be starting the first session of this exciting conference we have here on. It's going to examine the implications for IoT and PropTech in real estate, construction, insurance, and property management. And the opening panel today is very happy to be moderating a distinguished panel here, here to talk about the changing insurance landscape, reduction of risk through IoT. And just start out by introducing myself, and then we'll do a brief introduction for the panelists. So my name is Conrad McCallum. I'm a communications director at Continental Automated Buildings Association, and I joined CABA in May 2019. I've been working on the digital communications assets and handling also a lot of the editing of the reports. We have actually two reports that I'm working on right now. One focused on intelligent buildings and energy management systems, another one on intelligent buildings and COVID-19. So I'm very interested in hearing what our panelists have to say today. I just wanted to mention that over the next hour, we're going to be discussing the evolving nature of insurance and how IoT technology is driving this change in terms of risk. Risk management with the potential for lower premiums and deductibles. And I would like to mention that right now that the recording of the webinar started, and people who can't join will be able to view it later, a little bit later today. For those joining us live, we'll be taking questions at the end of the discussion, and feel free to shoot off your questions through the chat feature, and we'll have 10 minutes just towards the end of the hour to field some of those questions. So without further ado then, I'd just like to turn it over to our speakers, and I'll have Cameron introduce himself first.
Good morning, Cameron Britt, Northbridge Insurance. I'm the Vice President of Personal Insurance. I've been in the insurance business over 20 years now. Geez, that went by quickly. And responsible for the profit and loss of our personal, so home and auto insurance at Northbridge, as well as we introduced a high net worth product called Onyx about 18 months ago, and I'm responsible for that as well. Obviously, IoT tech is very important, and we do have some wrinkles with our new product that incorporates that, which I'll talk about a little bit later.
Great. And next we have Bill Fender from First Onsite.
Thanks, Conrad. Hi, I'm Bill Fender with First Onsite Restoration. I'm the Senior Vice President of our commercial property portfolio business. So we work directly with a lot of our commercial end user clients that are Fortune 500 property owners, managers, institutions, governments. And we also work really closely with insurance partners like Northbridge and Hub. I've been with First Onsite about 5 years now. Prior to that, I was in commercial real estate. I was heading up a property management company called Arcturus that looked after all kinds of asset classes. So really interested and excited to be part of this panel.
That's great. So next we have Sandra Henkel from Hub Insurance Ontario.
Hi there. Thanks for having me on the panel. I'm Sandra Henkel, Chief Marketing Officer for HUB Ontario. HUB is Canada's our largest insurance brokerage and risk advisor. And in my role, I work with insurance carriers on new business development, strategic initiatives. And I've been in the insurance industry, as much like Cameron, for over 20 years. I've been mostly on the carrier side, actually, and I moved to HUB about a couple of years ago and moved over to the broker side. So very excited about today's discussion.
Great. And Chris Delmora from HUB Insurance Ontario as well.
Yeah, thank you very much, Conrad, for having me on this panel today. My name is Chris Delmora. I'm a senior risk engineer with HUB International. I look after large clients all over North America from a risk management perspective. My background is actually in manufacturing. I've only been in the insurance industry for 3 years now, but I did a lot of risk management within heavy manufacturing prior to coming here. So I look after our large clients throughout North America, whether it's manufacturing, commercial, residential, the larger buildings throughout North America. We obviously try and get on site before people or take a look at the risks ahead of time, make sure that claims don't happen. And yeah, thank you very much for having me on the panel today.
Well, that's great. And we have, I just wanted to make a note again, everyone is who's joining us right now, you're welcome to shoot off questions that we can take up at the end of the hour. So let's start now with an overview of the insurance market. There's been a lot of talk that IoT has been sort of the next big tech wave to hit the insurance market. And interestingly, this is coming at a time where we've had this massive shift to the work from home, and a lot of businesses have engaged in the re-entry or are about to engage in the re-entry to commercial buildings. And so at the same time, we have property owners that are continue to be interested in insurance services, and they're always looking to prevent potential risks. So I'll start off with Sandra, if you can take us through the reality of today's insurance market.
Yeah, so I think there's a lot of non-insurance folks on today's session. So I thought, it might be helpful just to talk a little bit about, some of the factors affecting insurance in this day and age. And the insurance industry traditionally goes through market cycles. We call them soft and hard market cycles. And soft cycles are much, and to use some, there are a lot of realty folks on the line today, is a buyer's market. So rates are low, limits are cheap to buy, and then obviously so it's very friendly to clients and insurers. The hard market on the other side is one that sees increasing rates and tighter limits and tighter underwriting controls on the carrier side. And that is the environment that we probably have been facing for the last couple of years. That's driven solely by, the profitability of insurance companies. Insurers really make money in two ways. They make money on their insurance and underwriting operation, meaning they collect premium and they pay out claims. And then the second side of that is they make money on investment income. And so they take the premium that they collect up front and invest it. So that's how and that's often a 50-50 kind of how their profitability works, half from the investment side, half from the underwriting operations. And we've seen some, I guess, shifts or market factors that is affecting that profitability, and insurers have really struggled with return on equity and that profitability. One reason being, historically low interest rates. So the investment side of the house is very, very challenged, and now with COVID, that is even a bigger concern. We haven't seen interest rates in some countries, even negative interest rates, affecting the investment side for insurers. So that means definitely more pressure on the underwriting side to ensure that underwriting operations are profitable. And we've seen in the recent years that what drives that profitability, we call it a combined ratio, which is the loss ratio plus the expense ratio. And that combined ratio should be under 100. And insurers really have not achieved that profitability level. And there's a number of factors for that as well. We are increasing catastrophe type of losses, weather-related losses we've seen. I think the Insurance Bureau of Canada showed that between 2016 and 2019, all those years made the top 10 of lost years on record from catastrophe weather-related losses, right? So we're just seeing an increased number of those types of losses. And then there is what we call social inflation. Our loss costs are going up because we are more litigious as a society. You know, something that we've usually talked to about, you know, south of the border, but I think there's also in Canada increases in class action lawsuit, larger settlements, and then just a simple replacement costs have gone up. And I like to use the example, you know, a windshield is not just a piece of glass anymore on a car, for example. It's a sophisticated technology that works behind it. So fixing that becomes a lot more expensive, right? So those things have really driven up the loss costs for insurers. And you know, we've seen this in the property market over the last couple of years, where loss ratios are, you know, well in excess of 70%. And insurers are now able to have a lot more data. They can really drill down on where losses are coming from. So one segment, and I mean, we'll be talking about this more, is residential realty has been traditionally very, very challenged. So insurers know that, and rates are being driven up in those areas. You know, we just had an insurer last week, I got a bulletin from one of the carriers that they will no longer insure buildings built prior to 1975. End of story. So you can't get coverage, right? Or unprotected wood frame multi-story homes, very difficult to insure, right? So this really brings us into today's discussion, what we can do with IoT PropTech in order to help, you know, this class of business to become best in class and make them insurable going forward.
That's an excellent overview, Sandra. And I'm wondering, Chris, if you have, if you can add to that in terms of, as someone who is an expert on evaluating the risk and seeing at some of these global shifts and how that's impacting risk and your assessment of risk.
Yeah, it's amazing. And Sandra brought it up there about how much more underwriting is happening right now. And I guess a lot more engineering work is going into these accounts. So again, not necessarily talking about the market itself, but how the carrier recommendations are being handled. So typically, like when a loss control inspection is completed, a carrier sends a loss control inspector out to a facility. There's a lot of recommendations, or sometimes there's recommendations if any findings are noted. So in the past, a lot of the clients would just review these recommendations, and really they would look to implement some of them if they had remaining capital, if there was money available, if there were easy improvements. But a lot of times they were able to just push off some of these recommendations, sometimes just for an indefinite amount of time. Every year, the carrier would come back and say, what's the status on this? And say, we couldn't get it in this year, we'll do it next year. And they would keep pushing it off, pushing it off. That doesn't seem to be the case anymore. Although there's still technically recommendations, the carriers are often insisting on these recommendations being completed, or there could be a substantial increase in the premium, or the carrier may simply decide to come off risk, just similar to what Sandra was saying there before. The carriers don't want poor risks right now. And if a client isn't willing to make some of these changes, we're seeing it more and more where the carriers are just saying, well, we're done at the renewal, so you can find someone else. So we're definitely seeing an uptick right now in the completion of these recommendations. And it's definitely right now the carriers who hold the cards. So I think we're going to continue to see that trend as long as we're in this hard market. We're going to see a lot more scrutiny on the buildings. We're going to see a lot more force from the carriers in trying to have these recommendations implemented. And in reality, it is going to make things better for the clients, but sometimes it's a hard pill to swallow, especially if you have to put in a lot of CapEx right up front.
That's very interesting. That, I mean, and what you said about the need to sort of, I think the push to for some buildings to perhaps adopt or become adopters of IoT technology that might reduce their risk, and that this seems to be sort of a it's interesting. That's how that is going to develop, and it's very early stages with that. But I would turn it to Cameron and Bill. as well. But I would go to I think the next question, just in the interest of time. There's been a lot of discussion that over the years that insurance has tended to be a traditional industry, and I would ask Cameron if, given what we are seeing and the stakes, the high stakes that we're seeing, and the state of IoT PropTech, are we seeing that insurance has moved away a little bit from its reputation as a status quo industry, and how so?
Well, I would think that we are, but again, insurance is an industry that is always very slow moving, right? So, the importance of IoT and the ability to segment and get data in order to segment those risks. Chris was just talking about how we make recommendations, and our whole goal as an insurer is to make our clients more safe. So we want to prevent loss, right? We want to work with that client, work with our brokers in order to make that client a better client. So I think, this is an excellent way in order to quickly get results and get data about what our insurance clients are doing, what their setup is, whether it be a home, whether it be a business, whether it be a construction project. I mean, those are very important. So I think what you're starting to see is you're definitely starting to see the evolution of insurance with IoT. And I mean, south of the border, you've seen a lot of startups, even in Canada with Communitech at the University of Waterloo, we've seen a number, especially on the ride sharing side. You're seeing a ton of that, as well as now with user-based insurance becoming more and more prevalent within each province. So I think that, yes, the reputation of insurance being a slow-moving leviathan, I definitely think we're changing it a little bit. Well, I hope we're changing it a little bit.
And thanks very much. And Cameron and Bill, if you can add something to that, to what the others have said, from the point of view of commercial property portfolios.
Sure. In our commercial business, and just I think echoing what Sandra, Chris, and Cameron have all mentioned, it's definitely the frequency of events is up. Like, for example, this year they ran out of names for hurricanes. They had to go to the Greek alphabet. So that's common. Now, in the last few years, there's been multiple Category 5 storms every year. And those don't typically impact Canada much. But 30, 40 years ago, there was a Category 5 storm every 3 years. So we're seeing it across the board, whether it be wildfires, flooding, like the flash floods that happened in Toronto a couple of years ago. So those are driving, the commercial clients that we talk to. That's all part of it, where their deductibles are going up and their rates are going up. So some of them are even having trouble placing insurance. So we deal with a lot more clients now that are self-insured. Probably about 90% of the losses we tend to on our commercial side, they're paid privately by our commercial end user clients, which are the owners and managers, or the business owners. So that's definitely impacting their business. And as Cameron's saying, I think at the end of the day, we all have the same client, which really are the property owners and the business owners, and trying to mitigate losses and also prevent them. I think it's in all our best interests. And we're working traditionally in our business. We cleaned up the mess and rebuilt. Now we're working more and more upstream with our clients to bring technology to help them prepare, to build resilience into their properties. And Chris touched on that. We work with our clients to do wet flood proofing, dry flood proofing investments, but there's also many simple things they can do to avoid damage, that costly damage. We've seen a loss just a few months ago, especially now with COVID and a lot of unoccupied properties. We had a coffee machine line in a commercial AAA office space break free on like the 20th floor that in the past would have been $10,000, $5,000 in damage. It was over $200,000 in damage because no one's in the building to notice the water running for a couple of days. So we're definitely seeing those changes to our industry, and we have a unique perspective. We usually see the results of all this.
That's excellent. I mean, it leads in perfectly. The water detection technologies the focus there on prevention, because I'll bring in Shikaya Ganbarian right now, and because she is joining us from she is with InsurTech, with Eddie Solutions, the Senior Director of InsurTech. So I'll ask Shikaya if you can introduce yourself, provide a little bit more about your vantage point on the industry. And I would ask you, from a supplier side, if we are seeing an uptick in technology integration right now, specifically for IoT PropTech. And I'm just going to unmute you here. I have there. Go ahead.
Perfect, thanks Conrad. So yeah, I have actually the privilege of working with all these great people on this call today, from our brokers, restoration, as well as our insurance partner. There's certainly been a lot of movement as it relates to technology integration in the market. Even at Eddie in the last 5 years, we definitely seen insurers, brokers, developers incorporate technology, whether that's into their new builds or operating buildings. They're actively really looking at technology for risk mitigation to be able to proactively protect these projects and assets that they have to avoid those risks. So it's been really a great time for PropTech as well as technology integrations right now, to kind of echo everybody else.
That's excellent, and I wanted to bring in Chris, circle back to Chris, because with your engineering background, I think you might have an interesting perspective on what Shikaya has just said about greater technology adoption.
Yeah, it's amazing, because there definitely is a big uptick in technology integration right now to reduce risks. I mean, it's much cheaper to invest in preventative measures than to wait for a failure to occur and then make the fix. I think the problem sometimes, it's hard to justify a return on investment for a risk mitigation project. I mean, think about it. If you're in industry or something, if you make widgets and you invest money to allow you to make more widgets, well, it's easy to see the return. But it's difficult to sometimes see the return on investments when you're looking at cost avoidance. So prior to joining Hub, I came from heavy industry. I worked at a steel manufacturer there, doing a lot of risk mitigation. But there was a massive push at that point towards preventative and predictive maintenance, from real-time vibration analysis, temperature analysis, thermal imaging, human element programs, whatever it was all about getting out in front of the failures before they occur. And I think that's what we're talking about here as well today. It's the same thing happening in property risk management now. The goal is to prevent the incidents before they occur, or detect the failures very quickly and have them and react to them before they become large. You just heard about the example Bill said there. I mean, that's exactly what it was. There was a small failure, no one was able to detect it, and wow, $200,000 damage. That's a tough one. But what we're seeing now is more and more smart technology. So where algorithms can assess data in real time and make changes. So more and more, these decisions are becoming automated. So we're seeing systems automatically make changes. They detect something, they'll shut something down, or they'll send a warning. So it's creating much quicker response times. So I think, yeah, we're going to continue to see more and more of this investment as we continue to move forward.
That's excellent. And we had a question from the audience. I'll just throw this out there, and we can come back to it maybe in the next question. But this audience member wanted to know if any of the panelists can describe a practical example of an IoT application that you're currently insuring. And I think we've probably already alluded to some of them with some examples, but I'll just skip that for now, and I'll just come back right after this next question about damage mitigation. So I want to turn this over to Bill, because this is experience in the restoration world. I'd be interested in knowing how has technology become a part of what First On Site and others are doing, because there does seem to be that seems to be a thread for all of the commentators just thus far, that damage mitigation is going to be a big driver for them to take up IoT.
Right, thanks, Conrad. And I think to echo what Chris was talking about just a minute ago, and in our business, as I was mentioning before, traditionally we mitigated and helped businesses recover and rebuild. And now we're working much more upstream with our clients, and we have some pilots with Eddy Solutions right now with our some of our key commercial clients to put in technology for leak detection and smart valves and things like that. Now we're working with our commercial clients in preparedness and prevention measures now. We're able to use some of the data that we collect on frequency and try to target the risks. For example, one of our clients in the US has 17,000 retail locations. So it's not practical to install technology in every single retail location. These aren't big money drivers with each location, but when we use the intelligence and some of the data, we can then target the higher risk locations that we're seeing multiple water instances, water losses, for example, and target those with the technology to, you know, as Chris was saying, you know, it may not prevent everything, it might prevent some things, but might take a $25,000 or $50,000 loss and make it a $2,000 loss because it was detected right away. So in our industry, and I think everyone on the panel knows this, quite well, time is money in business interruption, in damage, mold growth, all that kind of stuff. So really working upstream to help prevent these instances from happening is key. And we see our role as being a true partner with our commercial clients. And as I was mentioning before, historically we would clean up the mess and rebuild, but now we're working more and more with partners in the insurance industry and the commercial owners and businesses to help them prevent things too.
That's great. And Cameron, I would maybe ask you if you can, you know, describe an example of an IoT that you're currently insuring, or that you're going to likely to see more focus on in coming years.
Yeah, definitely one of the things on the home and auto side, definitely in the home, people are definitely investing in their home these days in basement renovations, and you know the common basement renovation now is quite huge. I mean, even in kind with a kitchen renovation these days. But you know, we use obviously on our Onyx, which are high-end homeowners program, we use the Eddy Home solution. So what we do is we provide the Eddy Home solution free of charge to our clients. And way we do that is we offer a rebate to the clients in order to offset the service fee that you have to pay with Eddy Home. We've had a number of clients have uptake on this, and you know, it's definitely the water shut-off component of it is one of the things. You have a lot of people in this demographic that have multiple residences, whether seasonal residents, whether primary residents, whether a condo, those sorts of things. And we've definitely seen a lot of uptake on that side of things with the water shut off, but not only an alarm, but the ability to shut off the water in case you have a situation where you have a fridge water line let go and you're not home, or you know there's a sump pump failure. So those are the kind of things that we've been using in our world. And it definitely the more you can mitigate on this side of things, the better the risk. And if people are investing in these things, it just shows pride of ownership and their ability to create redundancies in their insurance plan. So, you know, we work closely with Eddy Home as well as Hub to make sure that those clients are having those opportunities to invest in the IoT world.
Thanks, Cameron. And Sandra, can you describe an example of another kind of IoT technology that, yeah.
Well, water is certainly the big concern. I think water losses are definitely, from a frequency perspective, now outpacing any other type of loss out there. So we also, similar to what Cam said, are partnering with Eddy on a residential product for high net worth, Hub Water Protect, to bring, to make that, to show the client the return on investment to all these, how they can lower their insurance costs by implementing that type of technology, right? We'd also like to see that on the commercial side. I have an example of where, we have a loss where that type of technology could have prevented it. And it was on a commercial property which suffered a contractor cut the main water line, and it cost a $6 million loss. So had there be a water shutoff installed on that pipe, that could have prevented it. So I mean, it can be a huge impact. So if that type of technology is implemented early on, not just for the homeowner ultimately, but even throughout the building stages, because it can lower the cost of builders' risk policies. So you know, the earlier in the value chain these type of technologies can be implemented, the better, and the bigger the savings all along, right? That's really, I think, where as brokers, you know, we need to come in to demonstrate that return on investment to our clients, that it's not just a CapEx outlay at the front, but there's a real payback over the life cycle of that asset, right from the development stage out to the homeowner stage, right? And that goes for all other types of IoT type of technologies, and the cost of those technologies is coming down significantly as well. So I think we are seeing that. So it's not as you know, costly upfront.
That's yes, that's an excellent perspective on that, and I would ask as well. I maybe bring this question to back to Bill. Given the this evolution that we're seeing, how are companies, insurance companies, going to use this to sort of improve their bottom lines? Is it going to be more kind of adventurous partnerships with different players in the industry, such as telcos or, you know, connected home providers in the industry? How will you sort of gauge this progress of the industry, and then you kind of use the best, I guess, use the low-hanging fruit and you know, the best candidates for improving your bottom lines?
Okay, yeah, as far as the insurance company's bottom lines, I'll leave that to Sandra, Cameron, and Chris to talk about. What I can address is the interruption to businesses, and I think it's all in all of our best interests. These are essential businesses in our communities, and costs go up to those businesses that affect everybody when they have interruptions that are caused by things like water losses. And Sandra mentioned that's the largest that they see on the insurance side. We definitely see the same thing. About between 60 and 70% of our responses are to do with a water loss. Even if it's a building that had a fire, most of the damage is even though there's smoke and soot, a lot of times most of the damage is caused by the water that put out the fire. So end of the day, water is the biggest factor with damage. And I think just generally, you know, as if you look at the macro of our economy, with these frequency of these events, whether they're natural occurrences or something that's happened, a lot of times incidents happen with pipes freezing or projects, as Sandra was just mentioning. We see lots of incidents when projects are happening in a building, human error, mistakes, pipes burst, get cut. And they, you know, that's an amazing example, $6 million in damage with a water main. And that's not uncommon. We see a lot of that. So I think, you know, as far as our entire economy goes, I think it's in all of our best interests. And the byproduct would be the insurance companies having a healthier business too, if things are a lot more predictable. And then also the damage is mitigated in a timely manner. It keeps these businesses open and also reduces costs across the board.
Yeah, and I see that there are a number of questions that have come in about specifically on the leak detection technology, and I would maybe ask Bill, you know, if are insurers contemplating making this leak protection mandatory for coverage, because given it's such a large loss driver during and post construction. And we're talking about commercial and multi-residential environments, like the way that fire suppression has long been a requirement. Yeah, Bill?
We're starting to see it in new construction. maybe Sandra can talk about the requirement, or Cam can. We've seen in new construction, I think it's a little easier to put it on early in the game when the construction's happening. Do it after the fact. I think you have to be a lot more targeted, and I think we're starting to see interest, a lot of interest from the insurance companies, and similar to the ways you get some kind of discount, or along the lines of having managing risks with having snow tires on. So there's definitely a lot of interest in prevention factors, because it'll lower the cost across the board.
Yes, Sandra, if you want to add to that.
Yeah, I mean, mandating it, I don't know that we need to let it come to that point. I think there is, again, a lot of benefits that everybody, the insurance companies and the clients, can garner from implementing that technology on their own, right? Again, as a broker, we need to help clients connect those dots and showing that return on investment and the savings they can realize. I mean, we're in a competitive industry. As soon as insurers realize better bottom lines on their underwriting, it will be passed on to the clients in form of premium reductions, right? So that connection needs to be understood, right? And I mean, you chip. I mean, insurance industry makes huge investments in InsurTech as a whole, right? Part of those are there to drive down the expense ratio, and you chip away at that 1 percentage point at the time. But if you can reduce the loss costs through loss prevention, those are game changer kind of bottom line savings, right? If you can save a $6 million loss, I mean, that brings down your loss ratios by huge percentage points. So that investment is even more important than maybe the expense, right? And we're in a transition here. I think we've seen this in the healthcare industry, where there's a transition from investing in treating illnesses to preventing illnesses. Very similar in insurance. We're seeing that now. We are investing as an industry in preventing these losses, because we understand, I think, that that's where the true savings are, and those are savings that will be passed on to the clients undoubtedly.
That's excellent. So I'd rather than going to the next panelist with that question, I'll skip back to the questions about technologies. So this is AI and machine learning. Okay, it's one question that'll be for Chris, Bill, and Shakaya. So will AI and machine learning help in the long run? We've talked a little bit already about how the use of data will make it possible to add personalization in insurance, and maybe smaller risk groups. It might help in investigations. And could you comment first, Chris, on what do you think those elements, those technologies will add to or help in the long run?
Yeah, okay. But actually, just before I jump into that, I just wanted one last point on the last question there, talking about making like leak protection mandatory coverage. I just wanted my 2 cents there. I think fire suppression, that's being mandatory because it's more of a life safety issue. Right. Fires, obviously, you can much more often that there's a chance for people to be killed or injured in a fire than water prevention. So I think we won't necessarily see it mandated, having water detection systems in there. But to Sandra's point, we could see reduction in premium if you do have those things in place. But that was just my 2 cents on that question there. But yeah, to get on the one about machine learning, how is it going to help in the long run? It's definitely going to help, whether we call it machine learning, artificial intelligence, algorithms, industry 4.0. There's so many different terms out there, but whatever term it is, it's going to have a big impact on reducing our costs. Why? It's simple. It's because we're going to prevent incidents before they occur. Or like we've been saying, if they do occur, automated systems can react and take action quickly to reduce further losses. So from a risk management side and insurance side, we should really see both the frequency and severity of claims go down. So we should see less claims because we're preventing them. And we should see the severity go down because if they do occur, we can react quickly. So no one wants claims. The carrier doesn't want claims. The client doesn't want claims. The broker doesn't want claims. No one wants to see these claims. We're trying to find solutions so people can avoid claims. Insurance is there for when claims occur, but ideally we just want to see the claims go down.
So maybe we'll go to Shakaya and then Bill. Did you want
Yeah,
to?
perfect. So I think we're.
Sorry, go
Yes,
ahead.
I was gonna just kind of echo Chris there. I think we're already seeing the ton of benefits from AI, machine learning in various different industries that are already utilizing this. And I believe it's actually probably one of the features that sets Eddie apart in the market, as we're utilizing the AI machine learning every day with our products in order to have the algorithms to be able to provide us the ability to successfully be able to detect leaks and ultimately stop a major water damage from happening. So that's obviously our use case for machine learning, but there's so many other use cases that technologies are utilizing this for in the industry that are benefiting from this today.
Thanks, Shakaya. And Bill?
Well, AI and deep learning or machine learning is definitely beyond my level of expertise, but what I can say is it would definitely automate what we do now manually for some of our commercial clients that have a large footprint and many properties, whether it be banks or retail locations or office or industrial. With many of our clients, we quarterly look over all their losses and manually, which is quite an intense effort, try to look for common threads and root cause analysis, and to be able to address those locations that may have had multiple losses or as a common thread through their portfolio. And that's really a labor-intensive effort to do that manually as we do it now. So any help by using the data and artificial intelligence to speed up that process and be a lot more targeted and smarter about how we would look at risk in these buildings, I think would really help at the end of the day for sure.
That's excellent, and I'm just going to head into the panel, the questions that have come in from the audience, and there are a number of questions sort of hit on the point about what are the insurers are going to recommend to their new clients, their smaller businesses. For example, smaller companies and businesses, they may not be as equipped to handle disruption. They may not have the deep pockets. So what is your advice for them to be ready to implement changes? And sort of related to that, how would the insurance companies work with startups to introduce some of these new risk mitigating techs into their business? Maybe I'll go to Cameron for that.
Sure. Thank you. Yeah, obviously we want to work with small businesses. Northbridge has a relationship with the Canadian Federation of Independent Businesses, and we try to work, to introduce that technology. We're not looking to increase costs. We're looking to prevent loss, save money, work together. So, there are many solutions out there, and we try to work best with which one fits to that business. Obviously, not creating a situation where they're spending half of their revenue on loss prevention for obvious reasons. And I think I'm always looking for opportunities with IoTs. I spoke just recently with a in-home alarm IoT solution. We're always looking for, I've spoken with someone about detecting electrical current increases that might be fire, issues, things like that. We're always looking with small businesses, and we look at what's the cost to us to give it to our clients. Can we discount? What's the best method? So we're always looking for those opportunities with startups, because the next best thing might be out there that might be, the panacea for a lot of the issues that we do have with changes in climate, changes in customers' expectations. So that's we're very open to looking at that. We actually at Northbridge have an entire department dedicated to innovation around IoTs and startups. So we're happy to speak with anybody. If anybody's listening to this call, we're happy to look into that and see what we can do, because we'd love to work with our broker partners and those startups to make a solution that would definitely benefit the safety of our clients.
Yeah, and Sandra, could you add a comment about how insurance companies might work with smaller companies or businesses that are that they want to be equipped to handle disruption, but they may be a little bit intimidated by the opportunity presented by IoT?
Well, again, that's where the broker comes in to help the clients look at the entire, risk solutions that can be deployed depending on what the needs are, right? So, and that means negotiating those discounts with insurance company for those best-in-class risks, right? So, I mean, there is still, particularly on the commercial side, it's, the rates can vary significantly from a best-in-class risk to a average risk, right? So, and that's why, we have folks that, I mean, for us, it's been a big focus at Hub on specialization. Risks are becoming more complex, and we have identified 8 specialties segments, and real estate and construction are 2 of those segments that we are focusing on to really help clients of all sizes to find the best solution for them. And ultimately, what we would like to see is that the cost of implementing those technologies are paying for themselves in the reduction of premium, right? So that's really essentially what we're trying to get to, so that there's a cost savings. Now, the problem often is it's a bit of a chicken and an egg, right? For the insurance carriers to provide those discounts, they need data to show that claims there's a real reduction in the costs, right? And that means they need a lot of data in order to build that into their pricing models. But that means we need more of these systems to be installed or deployed in order to get that data, right? So, but I do think that, on even at a desk level underwriting, that there are definitely, and Chris alluded to that earlier, best-in-class risks, and clients who are above, have better standards will see an immediate discount in their premiums, right? And that should pay ultimately for that technology, right? And again, what I can't stress enough is earlier in the value chain. So I mean, the developers on the floor today, the contractors who are building, new properties, they can price it in right into the cost of that ultimate, what that asset is worth, right? And they may be able to sell a condo for a few $1,000s more because there's a smart home package installed, right? So again, the earlier that decision is made, the earlier you reach out to your broker about what is a viable solution and what can be done, the better it is.
That's excellent. That's a great perspective, and I was just going to add, there were some questions that came in about this sort of borrowing of ideas and approaches from the industrial Internet of Things. And I think because Chris, you had made a comment earlier about some applications in manufacturing, I'll just put this question to you. The question from the audience, this audience member, was, what other risk mitigation measures do you see moving from the manufacturing field into commercial buildings? As an example, vibration data and FDD from your HVAC system, for example.
Yeah, so I look at this similar to if you think about like Formula One racing compared to your car that you have at home. You see the stuff happens on, well, there's so many technology advances that happen in F1 race cars, and now they've worked their way down to your home automobile. Same is happening right now in industry, working its way down. I mean, in the past, you'd have like vibration analysis on a $500,000 motor, like an 800 horsepower motor that's running 24/7. But what we're seeing now is more of that coming down to the smaller commercial and the larger residential buildings as well. So yeah, you are starting to see some of the new, let's say like HVAC systems out there. They'll have vibration analysis on the bearings, and it'll tell you if you're starting to see some movement on the fans, something's out of alignment. We're going to see more and more of that. It's working its way down. It's taking time. And I think, like alluding to what Sandra had to say, we're going to have to sort of see a bit of a balance with the carriers as well, providing a reduction in premium to allow for more of these things to be put in. Similar to those, you see it now when you drive a car. You can put one of those meters on your car. It'll record how you drive, and if you drive properly, I know I don't want to put one of those on meters on my car because I drive way too fast for that. But the people who put those on and drive responsibly, they're seeing an individual reduction in their premium. And that's going to work its way down. Sandra said we negotiate a lot of times when you have a best-in-class client, you can negotiate and get better rates for them. It's working its way down. It's going to continue to work its way down. And we're seeing more and more at even home and small residential areas where you're seeing some of these technologies that used to be only for like the large manufacturing areas, they're coming into smaller buildings, and we're going to see savings based on that.
And I'll just I'll go to one last question for the group here, and I'll ask maybe Bill to answer it first. So this person from the audience wanted to know, it kind of comes back to what we were talking about earlier, but given that justifying return on investment on risk mitigation can be so difficult, what mechanisms can insurers and brokers put in place to drive adoption for these technologies in their customers' portfolios? And it does speak to a little bit for the need to for new kinds of partnerships, perhaps in this evolving IoT ecosystem. Like, for example, in a commercial building where previously there may not have been a natural alliance with some outfits that let's say on theft mitigation. There may now be those opportunities. For example, the IoT, if there's an IoT parking garage technology, that would be sort of a natural kind of touch point in terms of data collection and mitigation. Bill, can you comment on that, on what strategies that can be used to drive adoption for these technologies?
I think the biggest thing is, well, first of all, by our insurance partners, it's all about incentives, and for our to drive adoption from the owners and the managers and business operators, but also it's interruptions to their businesses when I'm looking at a commercial aspect, and just starting somewhere, I think, works. Seeing, usually they know their areas of risk. The technology, the cost of the technology is coming down. Even in the 2 years we've been working with Eddie, the costs are coming down, and it's becoming more targeted. I know they work with tailored solutions. So do we with our clients. That can be, it doesn't have to be the full meal deal all the time. They can be very targeted and specific to handle risk to start, and then they can evaluate the ROI on investing in that technology beyond what insurance incentives may or may not be available.
That's excellent, and I think that's all the time we have for today. And I wish we had, or at least in this panel, I'm sorry that we have many exciting panels coming up, but we had a number of questions that came in, and I'm only sorry we weren't able to get to all of them. And I really appreciated the comments, the active participation from the group. I wanted to mention that everyone listening now can learn more about the participants and their companies: Northbridge Insurance, Onyx, Hub Insurance, First On Site, and Eddie Solutions at their trade show booths just by visiting the exhibit hall in the main lobby. So it's been an absolute pleasure, and I think we've learned a great deal about how the insurance industry is being shaped by this new wave in technology, and will also in turn shape the property industry in very interesting ways. So now I'm just going to introduce and let everyone know that we have another session coming up in just a few minutes, and it's the panel called Tales from the Front Line: How Buildings Are Leveraging IoT, and it features speakers from AXA XL, Tridel, One Valley, and Microsoft. And this is bound to be a very informative one. So I hope everyone enjoyed this panel, and I look forward to the upcoming panels and the continued exploration and insights on IoT and real estate, construction, insurance, and property management. Thanks very much.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye.
Bye-bye.
Thanks very
Thank you.
much.